Good day, welcome to today's video class. If this is your first time on this channel, please click the red subscription button below to get notified when I drop more videos. So in this class, taxation class, we'll be doing basis of assessment, as you can see on the board, otherwise known as basis period. But first of all, let me tell you why this topic is very important in taxation. This topic is very important that virtually any topics you want to discuss under taxation has something to do with basis period or basis of assessment, virtually all. And let me give you an instance. Let's say company ABC, every company has to pay tax every year. Have you know? So now, if each company is meant to pay tax every year, like for example, in the year 2017, company ABC has to pay tax of 2017, has to pay tax of 2018. But imagine the government officials, the FIRS officials coming in the year 2017 to collect tax of 2017. It doesn't make sense because the tax you want to collect will be tax on the company's profit. So, and if you are coming during the accounting year where the business year has not ended, definitely there's no how we can get our profit. We are still in operation. So basis of assessment is just how tax liability of each company is being computed and with respect to the years and all of that. But it is quite technical. But in this video, I'm going to break it down very well. So, but there's something we call current year basis. Let's start from there. There's something we call current year basis. There's something we call preceding year basis. But for this topic in Nigeria, most especially, we use preceding year basis. Now, what do I mean by preceding year basis? Preceding year basis means that the tax of 2018 will be collected in 2019. Because if government is coming in 2018 to collect tax of 2018, we are not done with our accounting period. We have not closed our accounting year. So there's no how we can get our profit to know our tax liability. It's not possible. So there's current year basis. There are some instances where we use current year basis. Yeah, but majorly we use preceding year basis where tax liability are being computed. Tax liability of 2018 will be collected in 2019. Tax liability of 2020 will be collected in 2021, and so on. So there are three things we will do with under this video. There are three things we are going to do with, but we are going to do with commencement rule. We are going to do with change of accounting date, and we are going to do with cessation. Yes, commencement rule. When a business just is just being incorporated, how do we treat their basis period? When a business is changing their accounting dates, how do we treat their basis period? And when a business is ceasing to operate, how do we treat their accounting period? Let's take questions. And but for the sake of this video, I'll only do it. I said we have commencement rule, commencement rule. We have change of accounting date, of accounting date. We have change of accounting date, and we have lastly we have cessation. We have cessation. But for the sake of this video, I'll be dealing with commencement and change of accounting date. So in the subsequent video, I will treat cessation under a separate video. So let's look at commencement rule. Let's take a question and let's analyze together. So welcome back. So the commencement rule. So if a business is newly starting, newly getting incorporated, how do we compute their tax year? How do we, get their tax liability and everything? So the commencement rule states that number one, if a business is just starting, that means getting incorporated, that the first accounting year will be from the day the business started till the day they chose to always end their business. Yeah. For example, company XYZ started business March 2020 and they decided that okay, April or they started March 2020 and they decided that November of every year is when they choose or when they want to be closing their accounting year. It's possible. So the first tax year will be March 2020 that the business started till November 2020. So that is number one thing you should take note of. So that is number one. Then it will now subsequently continue in the normal way. Let's take a simple illustration, a simple, very simple example, and look at it together. So here we go. We have a question on the board, which goes thus: says XYZ Limited commenced business on April 1st, 2020, and makes up accounts to November 30th of each year. So from the question on the board, a business started April 1st, 2020, and makes up his account. That means his accounting year decided to end his accounting year November 30 of each year. So in this situation now, I said that they said we should, okay, the required is determine the basis period for the first 4 years. So how do we determine the basis period for the first 4 years of this business? So it's very simple. So we have our solution. I said the rule of taxation according to Finance Act 2020 states that the first year will be from the date of commencement till the date the business chose to always end their account. So the commencement is this till the day they chose to always end. They chose November of every year to always end their account. So that's their first year. So let's go. We have their tax year, and we have the basis period. Tax year and the basis period. So now, from this question, April 1st, 2020 is the first year. So April is the fourth month, January, February, March, April. So April 4, 2022 makes up its account to November 30th. So 30th of November, that will be 30th 11 2020. So from the first day the business started till the end, that's the rule of commencement according to Finance Act 2020. The first day the business started till the end, they chose to the period they chose to always end their business. So I said in taxation we use preceding year basis. That means that tax of 2020 will be collected in 2021. Tax of 2021 will be collected in 2022. So this is 2020. This tax will be collected in 2021. So the tax year will be 2021. So that means that this business will start paying tax in year 2021. So since they have chosen 30th November to always end their business, look at it. You end, we have January, February, March till December. You already know that. So if a business is ending 30th November of this year, definitely the new accounting year will start 1st of December of that same year. So for this one, if it is ending 30th of November of that same 2020, then a new period will start 1st of December. So the new period will now be 1st of December 2020 to now November of the next year. So 30th of November of 2021. So if you count it, November to December, that is 12 months. November to December, that is 12 months. So this will be 2022. This is for the second year. So for the third year, 2023, so you don't have to stress yourself much now. It will start from 1st 12 2021 to 30th 11 2022, because that is if you count it. But when you just start, you can just write the months of the year outside, write it somewhere outside, so that whenever you have issues, you always go back, okay, November, December, to be able to understand it better. When I started this basis period, that was the same thing I did, but before I can now master it. So for the fourth year, 2024, it will be 1/12/2022 to 30th 11 sorry yeah 20 to 2023. So this is the basis period for the first 4 years as required by the first question. I believe understanding is coming up now. Let's solve more complex question on commencement rule, then we move to change of accounting year. So now we have another question on the board. Orion Limited was incorporated in December 2018 and commenced business October 1st, 2019. The first set of financial statements prepared by the company covered a period of 15 months, that is October 1st, 2019 to December 31st, 2020, and the adjusted profit was 3 million. Okay, in a nutshell, this question is trying to tell us that this particular company commenced a business as given by the dates, commenced business October 1st, but they prepared their financial statement for a period of 15 months. So we are required to calculate the relevant tax year and the relevant profit that will be assessed to tax. We're given the profit 3 million for the whole 15 months, and you know a tax year is always 12 months. So this is another complex question where we now need to, show the relevant tax year. And let me not talk much. Let's get to workings. So we have our tax year. We have the basis period, and we have the accessible profit. Accessible profit. So we use the remaining space for calculation. Now let's go. According to the rule of commencement, the rule of commencement states that the first tax year will be the date the business started till the date they choose to always end their business. So Orion Limited was incorporated in December 2018 and commenced business on October 1st, 2019. That was when the business started. So the business started October 1st, the first day. October is the 10th month. So 1st of 10 of 2019. That was when the business started. The first financial statement covered by the company to a period of 15 months. That means 15 months. But the rule of commencement said that the date the business started till the date they choose to always end. So if it started October 1st, okay, 10th October 1st, 2019, and they choose December to end, that is October 1st, and the adjusted profit was 3 million. Okay, let's say they choose to always end their business December 31st. Yes, that was when they chose, because even after the 15 months, they ended their accounting year December 31st. So that was when they chose. So now the first year will be 1st 10th of the 19th to now 31st December of that same year. So 31st December of 2019, the period at which they started the business till the period they chose to always end their accounting year is the first year. So now, if this is 2019, if you check the year 2019, and don't forget that in taxation we use preceding year basis. So the tax of 2019 will be collected in 2020. So the tax year will be 2020. Let's first deal with the basis period, then we come back to the accessible profit. Now, if they chose to end their business December of every year, definitely their starting period is January. So January of, now this is 2019, of January 1, 2020 to 31st December 2020. So the following year will be 1/1/2021 till 31st December 2021. So this is 2020, year 2020, tax will be collected in year 2021. Year 2021, tax will be collected in year 2022. So now, how do we now get the accessible profit? We're given the profit for the whole 15 months. For the whole 15 months to be 3 million naira. The profit for the whole 15 months will be 3 million naira. How do we do this? We prorate, we share the profit according to their periods, according to the time, to the length, to how many months it is. Now, if you look at it, this is 1/10/2019. That is 10th to 12th of December. That is 2 months from the commencement of October and November till the end of November. That is 2 months. And this is this profit is for 15 good months. So I need the profit for 2 months to be represented here. So if this is 15 months and I want to remove 2 out of 15, that will be 2 out of 15 times the total profit, which is 3 million naira. I believe understanding is coming up now, because you can also see it's very, very simple. So 3 million naira, that is 400,000 naira. So that gives us an accessible profit of 400,000 naira. So now, from a period of first first 2020 to a period of 31st December, January 1st, 2020 to a period of 31st December 2020, that's 12 months. So I need a period of 12 months to be removed from this 3 million naira. So 12 over 15 times 3 million naira again. 12 over 15 times 3 million naira. So 12 over 15 times 3 million, that will be 2,400,000. So this 2,400,000 for this year. So I've removed 2 months out of 15 months. I've removed 12 months. So 12 plus 2 months that I've removed, that's 14 months. So remaining 1 month. So 2,400,000 plus 400,000, that is 800,000. 2,800,000, remaining 200,000, and the 200,000 is for 1 month. The remaining 1 month that is left. So this accounting year is not yet complete, because it's not yet complete. I've removed 12 months, 2 months from 15 months. So it is not a complete year yet. So for the first 2 months, this is their basis period and this is the accessible profit. So in 2021, this 2,400,000 will be subject to taxation. And in 2020, this 400,000 will be subject to taxation. I believe you've understand the rules of commencement. So now let's proceed and let's go and look at the rule of change in accounting date. Let's take questions together. So for change in accounting date, what does the rule state? First of all, what do you mean by change in accounting date? Change in accounting date means, let's say for example, a business prepares their accounting, or their accounting year is from January to December of every year. Then all of a sudden they decide that no, they don't want to be closing their books of accounts December of every year. They want to be closing it April of every year, March of every year. It's not necessarily it is December. It can be anytime. So how do we assess them to tax? So according to the Finance Act 2020, there are some rules stated that, and the rule is that anytime a business decides to change its accounting period, its accounting year, that you should use the old period that they used before they change. That means that if it is from January to December, use that January to December to compute their tax liability. And if they now decide to change it to maybe March to April, use that March to April to compute their tax liability. Then anyone that has the highest accessible profit should be the one that should be used, because it is not FIRS, it is not the government officials fault, it's not government fault that you are changing your accounting date. It is you that decide to change it, so you should bear the consequence. So we will compute using the old um um accounting year end, and using the new accounting year end, and the one that will give us the highest profit, the highest accessible profit, is the one that will be used. Let's take a question and see what I'm trying to say. So right on the board here we have a question. Now Olowo Ilekomo, that's the name of the company, but I decided to omit that and write the important details. So if you look at this company very well, they have been preparing their account to be 12 months every year. 12 months to December 31st, 2015, 180,000. 12 months to December 31st, 2016, 240,000. 16 months. They prepared 2015 to 12 months, 2016 to 12 months, but they did not prepare tax of 2017, so they shifted it to 2018 and making it 16 months, and that was 336,000, and 12 months to April that year 2019, 144,000. So now this business has decided to change their accounting date from 31st 31st of December to 30th of April. How are we going to assess them to tax? So the rule of change of accounting date state that you look for the year where they did not file their tax, where the issue began. Now, if you look at this question very, very well now, in what year did the change of accounting date, in what year did they fail to remit tax that, yes, that is the year the issue began? Yeah, it is not in the year 2018 because you see that the year that was omitted was year 2017. So that was the year the issue began. So the rule say that the year the issue began plus 2 more years. So the issue began 2017. So 2017, 2018, 2019, then you will now compute the tax using the old, compute the tax using the new, then the one that gives the highest assessable profit. So that is what we want to do. We compute the tax using the old from 2017 to 2019, then compute the tax using the new from 2017 to the graph. So let's go. We have our tax here. We have our assessable profit, sorry, basis period, and we have our accessible profits. So now from this analogy, the 2017 is the year the issue began. So we are starting with year 2017 because that's what the rule states. So year 2017, year 2018, and year 2019. The year the issue began and 2 years after. So the issue began in the year 2017. Now, year 2017, let's first go by the old accounting period, which is 31st December of every year. Then we go by the new. So going by the old, 2017 period will be 1/1/16. If they are ending their business 31st of every year, definitely they are starting January 1st. So 1/1/16 to 31st 12/16, because it is a 2017 tax year and we are using preceding year basis. That is why in the year 2017 they will collect tax of 2016. So don't get it confused. It's still the same rule we are still applying. So for 2018 will be 1/1/17 to 31st December 17. And for 2019, same thing, will be 1/1/17, 18 to 31st December 18. This is for the old accounting period. Now let's go by the new accounting period according to what they lost it. So same thing, tax year, basis period, and accessible profits. So now going by the new date that the business has changed to, they have changed to 30th April of every year. So now from 2017, because that is the year the issue began, from 2017, 2018, and 2019. So for year 2017, if they are ending their period April of every month. So definitely if they are ending April, they are starting April, May. They are starting May. That's why I said you need to write everything. Let me write it out here so you get it. January, February, March, April, May, June, July, August, September, October, November, December. So if a business is ending April of every year, definitely they are starting May, because that is when our accounting year ends, April. Then we are starting a new year, May. So definitely that will be 1st of May. May is the 5th month. 1st of May 2015 to 31st, 30th of April, 30th of April 2016. Don't forget that it is 2017 tax year. So 2017, they cannot collect tax of 2017 in the year 2017. I've explained that from the beginning of the video. So it will be 2015 to 2016, a period of 12 months. So for 2018 period, will be 105 2016 to 30th 04 2017 for 2018 tax year. And for 2019 tax year will be 105 2018 to 30th 04 2017 and 30th 04 2018. Then if you have successfully analyzed the basis period, now the next thing to do is to calculate the accessible profit. So we do the rough workings here. Let's calculate the accessible profit. Now, from our question, which period? The period of 1st of December, 1st of January 2016 to 31st of December 2016. And I think we have that here already, 12 months. You can see 12 months to December 31st, 2016, a profit of 240,000. So we don't have much issue with that. 240,000. Now, the second one I said, a period of 2018, that will be, now, if you look at this now, a period of 2018, 1st of January 2017 to this 31st of December 2017. So 1st of January 2017 is within this month because this one ended 2016 December. So 1st of January 2017 is within these 16 months. You need to just analyze, is within these 16 months. So January to December of 2017 is within this year, within these 16 months. So I need to remove the profit of that 12 months out of these 16 months. So that's what I'm going to do. So I'll just say 12 out of 16 times, what is the profit for the 16 months? 336,000. 336,000. So if I take my calculator and I do the calculation, 12 divided by 16 times 336,000, I will have 252,000. So the profit for the 12 month is 252,000. Now, so going by that, I have 2019, which is 1st of January 2018. 1st of January 2018 is still within this month because this accounting year ended April 30th, 2018 and is 16 months. So January to April is still within this month. So I need to remove that 4 months out of it. I hope you are getting it. So 4 months, 4 over 16 times the 4 months that is here times 336,000. So 4 divided by 16 times 336,000, I will have 84,000 for 4 months. 84,000. But I cannot write the 84,000 because 84,000 is not the full profit for this one. This is 1st of January 2018. 1st of January 2018 to December. I only remove 1st of January to April because it ended April. So this is, I've removed 1st of January to April. I've removed 4 months. Then I need to remove the remaining 8 months from this period. So the remaining 8 months from this period will be, 8 divided by 12 times, what is the profit? 144,000. 144,000. So 8 divided by 12 times 144,000, and that's 96,000. So for 8 months is 96,000 and for 4 months is 84,000. So 96,000 plus 84,000, that gives me 180,000. 180,000. So I want to believe you understood how I got this. So, and if you don't understand, kindly reverse, take it back a little to get the explanation better. So let's look at how we are going to calculate the accessible profit for the new accounting year. So for the new, this is with according to the old accounting year. So to the new, according to the new accounting year now, we have 1st of May of 2015. So 1st of May 2015 falls which of these months? 1st of May 2015. 1st of May 2015 falls here, of course, because this is 12 months to December 31st, 2015. So 1st of May is here. 1st of May 2015 to 30th of October 2016. So the first thing I need to do is that let me first remove from 1st of May 2015 to December